Welcome to our presentation about News Corporation audit failure. We are Long, Sara, and George. First of all, I'll start with the company background. NewsCorp is a global media and information services provider established to hold a part of business segment of the 21st Century Fox, founded by Rupert Murdoch in 1979. The company business includes newspapers and magazine, integrated marketing services, book publishing, and pay TV distribution in Australia, US, and UK. As the top company in the media and information field, News Corp is having some of the most famous and respected brands in the world, such as The Times, Fox Sports, Fox TV, The Wall Street Journal, etc. Next, I'll continue with the accounting failure of the company. The financial statements of News Corp have been the attractive issues for discussion of earnings management. In fact, it has been revealed that in the fiscal year 2013, by creating significant other gains through acquisition, the company successfully avoided the losses caused by the dramatic drop in advertising revenue due to the financial impact of their legal scandals. In particular, News Corp witnessed approximately $450 million drop in advertising revenue, which in combination with other expenses would have led to the real loss of approximately $800 million instead of the reported $506 million using accounting manipulation techniques.
Failure is inevitable for the public to raise the question about the effectiveness of NewCorp's corporate governance after appearances of various legal as well as accounting scandals. There have been discussions about whether the company's audit committee as well as its internal audit fulfilled their duties in a truly independent manner. Noticeably, although the founders of the company have said that his company had a strong audit committee, the investigation of members of audit committee indicated the lack of independence required. However, the main issue of audit committee and internal auditor relate to the legal scandals of NewCorp phone hacking is whether their scope and capabilities for the internal audit activity can get into the core of the matters in the newsroom or just scratch the surface.
Following the phone hacking scandals in 2011, there has been question about the responsibility of NewsCorp auditor Ernst & Young, since they failed drastically in identifying, mitigating, or at least warning shareholders and public the liabilities which the company was facing. The independence of Ernst & Young was also doubted considering the audit fees which were continuously raised with a significant rate of 10%. However, since the role of external auditors in this case is similar with audit committee and internal auditors who were unable to discover what happened in the core activities, they avoided criticisms as well as allegations. After the scandal that seriously damaged the company's image and reputation, the company board was then involved in strategic actions such as acquisition, merging, or giving out bonuses with the intention to hide the loss due to financial impacts from brand damage. From the view of external auditors, there should be additional disclosure to protect public from misled information. Unfortunately, maybe the attractive benefits of News Corp have surpassed the responsibility of the investor's watchdog.
Finally, its conclusion, more than a decade after the collapse of Enron, despite outlines efforts of the accounting profession, auditors have still failed to be the truly watchdog for the investors and the public. Clearly, NewCorp is just one of several companies that were involved in financial figure manipulation which were totally ignored and not mentioned in audit report. Although it can be agreed that is still the expectation gap between auditors and the public. The auditor should not be affected by any kind of conflict of interest, otherwise financial statements are no more reliable, which thereby would lead to higher cost of capital, which negatively influenced the amount of liquidity of global financial cash flow.